Hello, this is Jeff Mish, President, co-founder of MarketGauge.com, and I'm filling in for Mish today. And I'm going to start with the ETFs, the indexes, the general view of the market. I'm going to go a little quickly because Mish goes quickly and because we've got a lot to cover. I'm also going to pick up where Mish generally leaves off in her review of the ETFs, so I can cover more rather than get too in-depth in any one. I like to look at the stock indexes as a set of four. For any of you who are not familiar with the way I generally talk about it, call these the Market Watch 4. Mish looks at the same things. It's got a little different lingo sometimes, but we look at the markets very similarly. The point for tomorrow, the point probably for the next couple days, is as I've drawn the line in the SPYs, still remains the fact that we pulled back and then we shot right back up to new highs. And so today we kind of paused, not to be unexpected. In fact, through the theme of this video will be, who can pull back into support and who is going to potentially fall apart if there's a pullback. So we need to look for two things tomorrow and in the next coming days. One, how long does the market need to take a rest before it takes another shot higher? Truthfully, today might have been enough for a lot of the stocks and ETFs that I'm going to show you. For others, I just don't want you to panic or get too bearish just because it comes back to support. So that's the case of the SPYs. Could really go either way. If it pulls back, could still look for dips. Pivots are going to be positive. Support is pretty strong. Diamonds or the Dow, same exact scenario. We're extended. Could we have another big day to the upside just because it gets more extended? Yes. After today's consolidation, certainly could. If we come back, I'd look for some weakness, opening range reversals to be a buyer. Qs, same story. If they come back, that's fine. If they continue, don't be surprised. We consolidated pretty nicely today. Fly in the ointment here is IWMs. If IWMs break out through this 83, above these 83 highs here, you're going to want to really be on top of that as a swing trader. There's a day trader as well. There's plenty of resistance to the left, but this is a lot of consolidation to break out from. Easy targets to look for would be the 84.30 level, and then we'll be looking up towards 86 as good round numbers for resistance there. Now the reason, and Mish has been covering this as well, the reason that there's good reason to believe that these markets could continue is because what's happening in the other indexes. If we take a look at the financials first, let's take a look at the XLFs. Scenario there is very similar to what I just described in the strong indexes. Broke out. If it comes back, don't be surprised if it comes back all the way to 15. It'll still be healthy. All right, Mish has covered the fact that this is actually a breakout of the 200-week moving average. It's the what she's been calling a 5-year breakout here over 15. So big number, big reason to do it. Consolidation or a move higher should be expected. Weakness shouldn't be feared. Look at the KRE. Same exact thing. You've got the KRE and the XLF in gear. It's the first time we've really had them this nicely in gear in a long time. But again, pull back down to the 2750 level would actually be a nice opportunity, not something to worry about. Let's take a look at another index here, the SMHs, that could have a little issue to resolve as far as the Qs are concerned. SMH, semis, not acting all that well. Like IWMs, as much as they've rallied back up, had a pretty weak day today in terms of getting up to this 35-30 level, not quite making a new high, and then selling off, closing near the lows, close weak. So I'd keep an eye on the SMH. I think as long as we stay above these moving averages, the 10 and the 20, we're okay. But if we get back down under yesterday's low, I would watch out. 34.34. That would be starting to get a little too heavy and indicate maybe it needs more time to hang around. Another index not really pulling its weight is the transportation, the IYT. So IYT rallies right back up. Granted, the 50 here, which is the magenta line, is upwardly sloped, but right back up to resistance at 94, and today has a weak day. I mean, it's still an inside day, but if it breaks lower, that's not going to be a good sign. So how am I going to look at this? If I look at the SMHs and the IYTs as being weak, we'll take a look at the energy too. In fact, why don't I put those up here? I've got USO, which Mish has been tracking, which looks pretty nice on the daily chart. Okay, getting a little heavy. Thing you want to watch out for is the OIH. Okay, OIH has not acted as well as the USO. Okay, so OIH hasn't kept up with crude. Not something you want to panic about, but if OIH starts rolling over, there's going to be opportunities on the short side there, and I'll show you a little more detail on that in just a minute. So if I take a look at the indexes here, these are the kind of the indexes that might pull the market down. If these indexes start coming down, expect the general market probably not going to take off to the upside, and look for more consolidation. Let's take a look at a couple that are still doing all right, though. IYR. All right, real estate. Healthy correction right here. If I blow these up now. Healthy correction at this high. A little bit of consolidation here would be nice, but the bigger picture here, this flag back to the 50, any move higher, yes, you've got this resistance you want to watch out for at the 63 level, but strong move up, nice long consolidation. The next leg up, while it may take a couple days of consolidation to get going, you want to pay attention to this on the upside. Another one in a similar situation, IBB, the biotechs. All right, these have spent a fair amount of time consolidating in a rather orderly flag at a high level. So if it can move up above this 120.73 level, 121 level, you want to keep an eye on that. Today was an inside day, so you've got a nice consolidation here that could push it higher. If it moves higher, you want to follow it. If it moves lower, I would hang back and wait. XRT, you'll want to remember this because I got a couple of stocks we'll look at with this as well. Just hasn't paused a bit. Due for a correction. More important reason in terms of looking at this is because you've got retail that just doesn't seem to want to give up. It didn't pull back at all with the rest of the market. It's if it pulls back, that's fine. The point is you've got that strong momentum over there in retail, kind of counterbalancing what we saw in energy. Semis not really getting going. Biotechs stalled. These just keep going. Had some questions today about TLT, TBTs. Mish has been all over the TBTs, which is the reverse of this, as bottoming for quite some time. Big payback in the last couple days for that position. I want to point something out here, though, and that is this high over here, which is kind of a clear target for the TBTs. But one thing about these double reverse ETF instruments, the longer term patterns often don't track very well. Alright, so let's take a look at this high. Look how far away we are from that high. So it'll be natural for you to be looking at that as a target, and you should. But remember, this is pretty much a derivative, a reverse derivative of the TLTs. So I like to look at the TLTs to get my bearings on the TBTs. And so the question that I had today was, how far can this thing go? And let me just give you a quick addition here. Let's add the 200-day moving average. That's the gray line that shows up. So really nice breakdown here we want to take a look, and a lot of you are probably short this by being long the TBTs, and hopefully you've got your tail on. Where do you take it off? Well, the low of this day is a good area to look for, 110.76. The low of the next day, good area to look for some support, 109.82. And then if we kind of look at where the bigger picture numbers are, you've got this high here, which is like the 109.34 level, and this low, remember, is 109.82 level. So if we get down to the 109 handle, you got good reason to believe that you could have some support there. Then you've got another area around 107. Where was it? Yeah, this is 106.5. But if you get into the 107, I'm looking at this area in here, this area in here. That's going to be a major support level, especially cutting through such a steeply sloped 200. So we're getting to these areas where we could expect a bounce. Doesn't mean that this isn't a big top. Doesn't really matter as a swing trader. Just those are the areas I'd look for some support. So we've got a lot of interesting ETFs, indexes situation. I'm going to drill down quickly here into the OIHs. All right, OIHs on a 60-minute, I think it's clearest. If you take a look at the 60, the OIHs are really coiled. Here's a nice wedge. You've kind of broken down from that wedge today. If we follow through here, could be a nice move to the downside in the OIHs. And you've got the USOs that have kind of been stalling here. So that could happen together. Keep an eye out for that and the stocks that are within it. So that concludes the indexes.